Alrighty, good morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion, where your favorite analysts from Trade the Chain break down everything going on in equities, TradFi, commodities, crypto, and everything in between. You're joined today by myself, Nick Mancini, along with CJ and Monte, senior research analysts, all at Trade the Chain. And it's been quite an interesting Thursday. Equities just gave back, a lot of yesterday's profits. Crypto has been down. There's obviously no escalation from the quote unquote war news that got over the weekend, but something is spooking markets. And we are going to discuss, what we think is going on and what the future may entail. So I'm going to go ahead and pull up the Trade the Chain dashboard just to give everyone a quick crypto overview. Obviously, total market cap is down 0.5%. That is, altcoins and Bitcoin, which is definitely not what we want to see. Bitcoin is down along with Ethereum. So Ethereum actually down more than Bitcoin today. So we actually, that Ethereum strength is starting to dissipate. Sentiment is still bullish. I think people are still hoping for a bounce. Yesterday we were talking about the prospect of a bounce and we got a small one, but obviously gave all of that back yesterday. Even the hottest on Twitter are not faring too well, other than Loom, which I believe is one of those cartel funding coins where they're just they got negative funding out the wazoo. But we do have a couple of outperformers today. FXS, also ApeCoin. I wonder if there's something going on in the Bake ecosystem. Top exchange inflows, ZOR 1.15%. STMX, I've seen a lot of exchange inflows over the past couple of weeks. That's something to watch out for. REC was a big cartel funding coin yesterday as well, with more coins being added. I would watch out for a possible squeeze on the horizon before trying to get too short on that one. But if we look at the exchange flows, our stablecoin exchange flows over the past 24 hours, big amounts being pulled off of exchanges, which is certainly not the trend we want to see. So let's go ahead and move over to actually what's going on in markets. And, this has been kind of our favorite starting point of the day. And I'll go ahead and remove these because I think we all know this thing is chatting up pretty hard. But CJ, Monte, let's start here. I mean, it's just kind of basic technical analysis tells me that when you get this strong of a 12-hour reaction, especially during the U.S. session, it's tough not to target the recent highs, and it's tough not to think about, the next set of highs, which are going to be up here around the 108 level. So are you guys kind of thinking the same thing, that it's more likely than not that we end up jumping up to, low 107 or 108 in the near future? And if so, do you think that plays into a bit of a negative perspective for risk markets, meaning crypto and equities?
I'll tell you what, Nick, I'm starting to think Paul Tudor Jones just got on national television and then proceeded to dump hundreds of millions, if not billions, of various Bitcoin assets on top of our heads. In all kiddingness, I do think there is a lot of correlation from the Hang Seng index that has kind of affected Bitcoin that way as well. To your point with the dollar, though, yeah, I mean, this thing is a freight train. Just get out of the way for the time being.
Yeah. Is there anything you're noticing on positioning? Are a lot of people offsides or onsides, or is it pretty neutral right now?
We'll see tomorrow. Tomorrow will be interesting. I assume,
Okay.
At the start of the week, there was a lot of large speculator longs that may or may not have covered. I don't think they've covered a lot of them, but, we'll see ultimately how that data comes in and what it looks like tomorrow. I would assume it's probably a little bit more neutral than last week's data, though, based on the price action. But, sometimes those assumptions can be wrong. So I'd rather just wait till tomorrow.
That's not a bad idea. I think we took a couple of shorts early in the Trade the Chain community and some crypto assets and closed on the sweep earlier. But, and before, I guess, well, whatever, let's just kind of dive into Bitcoin now. I was going to start with equities just to kind of set the tone, but this is a chart that I think is fascinating. And honestly, I will say, so, this could be something for the bulls. A lot of times when we get on here and we start talking about spot selling and spot CVD looking very ugly compared to perps, we have actually seen some reversals. But, if we just kind of zoom out a little bit here, it's been pure selling, really across the board. And obviously you're seeing a lot of red candles coming here, but this is not what you want to see as a bull. And I think, kind of talking about the freight train, step out of the way until you start to see a shift in spot cumulative volume delta, which, shows you kind of, what the type of positioning traders are taking on average. It's just mostly selling. So if you kind of look here, this is spot market. And obviously the spot market is much heavier on the sell side than the perp market is. And obviously if you want a rally to occur, or at least some sort of bottom to form, that's going to take some spot buying. Someone has to form that bottom, right? You're not going to get there with perps. So this is definitely a bit of a worrying chart in my opinion, and definitely something to keep track of. I may give, I put this setup in the Trade the Chain community a few months back. I may put this setup back in because this is a really easy chart to set up on your own. And you can track whenever, that CBD bottom hopefully forms. So let's just check out the Bitcoin chart. And I'm actually going to zoom out here to the 4 hour just to give you a bit better of a perspective. So this is the grayscale candle. We obviously swept that level last Friday, and we've been kind of down only since. Hopefully we have some sort of survival at the 26.4, 26.5 level. But, in my opinion, if that does not hold, then we will be looking for somewhere around 26 flat. And if that does not hold, it's tough to really think that we're not going to visit the 24.8 to 25K level down here. So I'm hoping that my words inspire the bulls a little bit to prove us wrong in terms of the CVD trend, especially with, these targets that we're talking about. But CJ Monte, I know you guys try and refrain from, getting too far out with speculation, but, are you guys, are there any levels where you're looking to buy, or is it, as CJ said, let the train ride, get out of the way, and get on whenever it hits the next station?
Yeah, I'm on that train, waiting for that next station, and it feels like that next
First
station.
class ticket or coach?
No, I'm coach, baby. I'm all the way back in the caboose, and and it feels like that next station is like a million miles away. But what I will say is that, I think in order for Bitcoin to show signs of strength, Nick, you're absolutely correct. We need spot buying to come in, and that's just not happening right now. And it's understandable, right? Like from why would someone come in right now and spot buy Bitcoin? Like that would be essentially like a hero buy. I don't see anyone, coming in and buying massive amounts like we saw at the beginning of 2020 that then led to continuation in the perpetual futures market. So, maybe once we get back down towards 25K, we can start talking about, scalping some longs if people try and short this market below 25K, because I do think the 25K level is going to hold. But in the meantime, like, I think it's just look out below, get out of the way of the train. And yeah, I think 25K is seeming more and more likely by the day. But again, a lot of it is contingent on equity markets. But even if we see equity market strength, I don't think that necessarily translates to crypto strength, but equity market weakness certainly correlates certainly leads into Bitcoin weakness. And I think we're seeing a prime example of that today.
That's a good point. And if we, we'll talk about equities in a little bit, but if you, overlay, equity, either S&P futures or NASDAQ futures on top of crypto, you see crypto weakness when equities are rising, at least in the past week or two, I would say. And then whenever equities take a dive, like happened actually in the last hour and a half, crypto does as well. So very much something to consider, in terms of the bullishness, in terms of wanting to get long. And we even talked about long scalps in the TTC community. I think only one really played out the way that we wanted it to. And we've not been really encouraging people to do it, but obviously, letting people know what levels are critical and which aren't. So great insights there, Monte. So let's go ahead and pull up the ETH chart just so we get a well-rounded perspective. And I'll go ahead and zoom out here on the 4 hour as well. And so the scary part about this chart, let's get rid of some of these indicators to make it a little bit less confusing. But I think the worrying part for me about ETH is that we broke this low. And this is, obviously a new monthly low. And if we even keep going out, it's not good. The last time we were at this level was March. And before that, that was kind of March, February was the last time we were hanging out in these kind of prices. And that's, big drop off. So from a macro perspective, there's your high, lower high, lower high, lower low, lower low, lower low, lower low. So, bulls may say, maybe we can get up and form another lower high up here, maybe some sort of ugly head and shoulders, but I'm certainly not going to be the person to step in front of the train, so to speak, and try and beat that. So what I'll be looking for in terms of future price action, I think the 1500 level down here is going to be critical just psychologically. We do know the market likes round numbers, and you'll definitely always see a good reaction at a good clean round number, especially one that's kind of in the hundreds or the 500s or the thousands level. So 2000's critical, 1500's critical, 1000's critical, etc. So I would definitely watch out for some sort of reaction here. But if it does break lower, and let's zoom out again and just kind of find where support would be. The two critical levels that I would think, at least in the near future, would be 1460, which is the low from the 14th of February. Also just the February low, and then the March low, which is down here at 1370. So basically, I'm going to be looking very closely at the previous monthly lows for a potential bounce or really good reaction, i.e. spot buying, as myself and Monte have been saying. But if this 4-hour closes, and we'll know at about 4 p.m. Eastern time, if this 4-hour closes beneath this September low, then in my belief, I think 1500 is a given. And then we'll look towards those, February and March lows that we just discussed. So, Monte, are you seeing a bit of the same, or thinking a bit of the same, or do you have a slightly different outlook?
Yeah, no, I'm right there with you, Nick. If you thought the Bitcoin chart was ugly, then this ETH chart has to have you feeling nauseous, because it is just not looking good. And one thing I will say though is this, like, the fact that it's breaking down below a critical level. Okay, at least we're getting some directionality, right? At least we're getting some form of directionality, and I think that's a positive element that we can glean from this, some silver lining. And I guess to better demonstrate that,
Yeah, you're gonna have to demonstrate that point.
okay, invert this. Imagine that this was, imagine this was we're living in a mirror universe, and this is what the chart looks like today, right? This looks beautiful. This looks like a breakout of a cup and handle, and it looks like we don't have any resistance up until 1368. So that looks like a nice breakout. You have clearly defined risk in terms of, right at these candle bodies down here. And then you also have, a clearly defined target being all the way up here. So this looks like an ideal long trade, right? And one thing that we always talk about with ETH is it's kind of like a gateway to the alts. And I think I still think that that's the case. And with this weakness, I think there will be some massive altcoin weakness. So from here to here, let me flip this back to reality. No, sorry, this is the real
Take
world.
me back, Monte.
Yeah, this is the real world we're living in. But nonetheless, at least we're getting some directionality. So I think that this is going to lead to some altcoin weakness. If you are looking to short anything, I think that the fact that ETH is now in this mode of kind of negative price discovery, where we don't have too much support until, like you pointed out, about 1460 and then 1420, that's a long way down. And if ETH makes a move like that, a lot of these altcoins are going to get absolutely crushed. And like I don't even have to pick one. Like just throw a dart at my watch list.
Pull up Render. Render looks like it's on the precipice of possible destruction on the 4-hour.
Yeah, there are a lot of charts that look exactly like this today. So that's a silver lining, CJ, Mr. Negative. That there's opportunities to short this because I think I haven't had the conviction to short a lot of assets because of the fact that ETH and Bitcoin, I was hoping to get signs of strength out of them. But now that we're not seeing that, and now that ETH has clearly broken below a critical level, and like I said, is showing signs of at least some form of directionality and not just chop, 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 chop. Like now we're getting some directionality. So take advantage of that. And I think that with that directionality will come a lot of opportunities in the altcoin market. Things like some of the OG DeFi products, I think, will be hit pretty hard. Things like Uni, things like Sushi, Aave, and many more, I think, will fall very hard if ETH does hit those levels that we're mentioning, which is looking more and more likely. So that's kind of been the thing that's been holding me back from shorting these assets. So now that ETH is like breaking down, I think it's okay to go ahead and define the risk with these altcoins and take a shot to the downside because today things are clearly breaking.
Yep. And go ahead, CJ.
Yeah, I would say ES breaking down is even more confirmation.
Yeah, we're gonna
get when you go up the hierarchy, the pyramid of
absolutely
capital or whatever you want to call it.
Yeah, we're actually going to get to that in literally just 1 second. I just wanted to show one last thing, which kind of is just a small theory of mine. But if you kind of look at the recent selling across all the exchanges, a lot of it is localized on Coinbase. Definitely some Bitfinex as well, which we know a lot of American traders like to trade on too. But who uses Coinbase to sell? And that is the U.S. government. And they still hold a lot of Bitcoin. And it's obviously in their best interest, at least the current administration's best interest, to try and defeat whatever positive narrative there is. And so definitely think that there is a possibility that there is one big seller who is kind of pushing us down. And so obviously it's just a rumor. I have no facts other than the exchange data to support this. But if you see Coinbase doing the most selling, there's only a few people that have a lot of Bitcoin to sell like that. So just something to keep track of as well. And I will hold to my promise. I'll update the TTC community on how to get a little AGGR tape going so you guys can track this as well. So let's move over to equities. I've got the S&P futures chart up here. This was the bull target that we had yesterday. It was 4380. We obviously got up to 4400, almost 4400 flat overnight. And then we basically gave back all of Tuesday and Wednesday's gains in pretty much one candle just before we got on the show. So I will say silver lining. This is a bit of a demand zone right here where it is wicking, and it's obviously popped off of the 1 hour estimated 200 moving average. So I wouldn't count equities out just yet. But, seeing this type of rejection, especially also at the 4 hour estimated 200 moving average, which we know proved to be a deviation candidate, all the way up here. That is certainly worrisome. Doesn't mean it's done right now, but we do know historically when we form a lower high and drop underneath the 4 hour estimated 200 moving average, it typically leads to volatility and then lower price action. So that is something to watch out for. It's tough to really spin whatever future I think is going on, especially with a 4 hour that is wicking, and kind of hovering around the weekly VWAP. But this doesn't inspire any confidence in myself unless we get above the 4 hour estimated 200 moving average, which we know, obviously has kind of been the do or die trend maker, if you will, over the past few months. So CJ, Monte, I'd love to hear your insights as well, because I know you guys are a little bit more hyper-focused on equities than I am.
Well, CJ, I'd love to get your thoughts on that spot selling on Coinbase. That should be good for your stock, no? Generating all that revenue from those fees.
Yeah, I don't really think it matters that much. Yeah, I mean, equities don't look good. I think today's not really a news failure because we had really bearish news to begin with, but I do think there are interesting reversal opportunities in a couple of these assets. Maybe not today, just because I'm kind of confused. I don't really know what's happening other than the fact that there's a lot of fear and a lot of, panicky price action. I don't really want to prematurely hop into a short and lose money after a reasonably decent week. So, but the positioning, when we look at Nikkei, this data is a bit delayed, so it hasn't seen the negative price action of today in this candle, but we still have been crowded, and we still haven't really gotten a lot of these longs out that bid all the way up into the highs. So, maybe we'll see if that one puts in, a third or maybe a second lower high. I'll go to the live chart and NKD. So perhaps that's an idea, but I haven't been looking at much else. I mean, ES is pretty bearish as well when you look at, the fact that there's still a lot of retail and large speculator longs who bought this dip. Price was really good, very favorable for the first start of the week, but markets that are down Friday tend to sell off into Monday as well. Obviously today's Thursday, so we'll have tomorrow to see what truly happens. But I kind of have to go back to my original point, which is just like avoiding disaster and like being in a position where even if there is catastrophe, you still have capital to be able to buy when everything is burnt to the ashes, essentially. And then hopefully the Fed prints a bunch of money and we'll see whether it works or not. And maybe we go into another bull market, or maybe this is a 14-year depression like after 2000. So, and like the Ponzi theme thing just like completely unravels. But that would be the very bearish idea. It's funny how price goes down 1% or 2%, and we can start kind of believing that.
Well, you also mentioned news, CJ, and the big news that we did get today was the CPI print, which was very interesting as well, because CPI was up or was higher than expected, but I think a lower print overall, as was core. But I think the fact that it's above expectations, we're still sitting in the 3% range for CPI, we're still sitting in the 4% area for core. I think and this is a tough narrative to spin, and there's a lot of nuance and smaller pieces of data, but to try and put a cap on it, it seems like higher for longer. This supports that narrative. I don't know if it supports a November hike. We have the next FOMC meeting on November 1st, the day after Halloween. So it'll be a truly spooky FOMC meeting. But, that's a tough call. But it's clear that there are more people starting to get on the train of, oh, my gosh, inflation might be a little bit more sticky than we were giving the Fed credit for. And if that is the case, then, typically you should see bearishness in the risk assets. Typically short duration bonds should head higher. DXY obviously heading higher. And so if we continue to see that trend, it's going to put the Fed in a bit more of a bind, and then they may have to do more, which then exacerbates that negative feedback loop for risk assets. So something to very much keep track of. I think we'll have PCE before the FOMC meeting towards the end of the month, maybe next week or the following. Let's see. Actually, I should be able to see next week's data. Yeah. So We do not have PCE next week. I believe that should be the one of the last weeks of the month. So that'll be interesting to look out for. But right now, the current data that we have, especially with PPI not really moving the way we wanted it to, along with CPI, that definitely, you know, puts a feather in the cap of the Bears, at least for the time being. So something to continue to monitor closely. I know another, you know, made up data point by the government that we have to sit there and, you know, play tarot cards over, but such is life. So getting a little buyback action in crypto. You know, I'm not seeing spot CBD move. It's all perps. Let's pull this up just because it's been kind of part of the show already. As you go, I've got the 1 hour going, but as you can see here, perps moving up, spot CBD flats kind of down. So that's moral of the story is we're going to be kind of stuck. I think we're going to be stuck with kind of volatility, up, down, perps, you know, longs close, etc. So stressful trading times, but that's, you know, this is the world we love to live in. So CJ, Monte, any kind of final notes before we go? Or actually, for the viewers, if there are any assets, whether it's forex, commodity, crypto, you know, equities, you know, if there's something you want us to check out, we do have some time to do that. Feel free to just pop that in the chat, and we'll get to it. But as you know, anyone who wants to, CJ, Monte, any final thoughts, any final notes, anything you're looking out for heading into Friday or the weekend?
I just want to say this whole crowdedness within the long duration bonds or the long duration treasuries, I don't think it's going to work. Ultimately, for the points a lot that you made earlier, where inflation, you know, this issue is not yet back to the Fed's mandate, and it is not over by any means yet. So I do think there's going to be a surprise to the market in the sense that the Fed will keep rates higher for longer. I don't think that necessarily entails a hike or anything. It just will be, you know, kind of that persistent bearish. Now, we don't really know how stocks will react to that because we haven't seen stocks in an environment like that in quite a while. Perhaps we see, you know, a reflexive death loop of equities. I don't know if that will happen, but it's going to be difficult, especially in the current positioning. But if you keep rates higher, like things like EDV and TLT are just going to continue to go down. And although they did bounce back a little bit off the lows this week, you know, today they're doing very poorly, like a lot of the other G7 currencies outside of the dollar. But that's one thing that, you know, I think not a trade that I'm in or taking personally, but it's one that the system or just like COT positioning would have told you to avoid throughout the course of this year. So, you know, I said this with Monte earlier in the week, but it's like avoiding those losing trades that were like massive and very alluring and were, you know, calling to you like a siren song. Avoiding them is, you know, sometimes in certain cases just as important as hitting the good trade. So
100% agree there. I mean, that goes back to the, you know, just get out of the way of the train. Just wait till there's, you know, enough data to say that I'm confident in this trade rather than just doing it because you saw, you know, a wick or, you know, it hit the level that you wanted it to. So great advice there. So we did have someone ask about Loom, and I'm going to pull the Loom chart up, and I will admit this is not easy to give technical analysis on. Obviously, you know, because it just ripped. You know, anytime you get some wicks like that, you would naturally kind of assume some sort of, you know, maybe some volatility here, and then it kind of starts to slide down, maybe up to this level. I'd kind of call this right here a little demand zone. So don't want to move that. So I would be patient with that. I think you definitely want a few more hourlies to play out because as you can see, anytime it has formed this, you know, it's, you know, kind of formed some sort of local top, but it's obviously if you were shorting around here, you got blown out. And there's a lot of blowouts on this chart. And so that would be something that I would be mindful and careful of. We do know how these cartel coins can squeeze. I think I have the funding rates right here. I want to say Loom is one of the top ones. Yeah, Loom is number 2. What is this T? I've never seen a one letter ticker.
is that
What do you say, CJ?
Never mind. I thought it was going to be like ton coin for a minute, but maybe I don't think
But
so.
that, oh my gosh, I was just talking about Stratus yesterday with some friends because that was one of the first coins I'd ever traded in my life. And they actually changed the ticker now to Strax. But I was literally just like looking it up because I was like, I wonder what happened to this coin. That's very funny to see that at number 3 funding today. But Loom is number 2 in funding on Binance. One of the top funding coins on, I think it is the top funding coin on Bybit, obviously Gate IO as well, which is a favorite DGen exchange for many. So Loom can definitely head higher, but I will say, and this is kind of something just can keep watch on a lot of assets, whether it's a spike lower or a spike higher. Sometimes you see this, especially with the high funding coins, they'll end up running the recent high and kind of getting which will kind of scare shorts. And obviously fuels the move higher. Then once it kind of tags this level, it'll just drop straight back down. So, kind of right here is what happens. Same. It doesn't always have to happen that way, but even here, at that high, it dropped down, it ran the high again, and then flatlined before moving higher. So that's also something to watch out for. It's a favorite cartel technique. So it's very similar to what you're seeing right here is, spike up, runs that high to clear out all the shorts, and then then the shorts play out to the downside. So something to be cautious of there, but I'll be honest with you. If you're trading this, you are a very brave individual. So I'll leave it at that.
I think that's probably a great short trade. Probably if you were to just buy an option like 3 months out, it's probably down 50% of where it's at right now. However, if you were to trade this via perpetual futures, it's much difficult. I wouldn't short this right now because it's going straight up. You have to wait for that 1 hour where you basically have a trend break because the price is just so negative that it creates a large red candle. Usually you'll get a nice rebound off that. And that's what I like to short is the first like lower high after a pump like this, because in certain cases, one, that will create defined risk, but it will also, ideally the first high was the actual peak of the trend. And based on the fact that this thing's gone from 4 cents to 24 cents in the last week, I think we're a lot of these like interim pumps that we've seen in the bear market have tended to last like a week.
Yeah, and if a coin has, and this is also a good site. It's free. It's called coinglass.com. I check it, daily or weekly, sometimes depending on what I want to trade. But if you see a coin that looks like Loom, it's more likely than not, especially in this type of market, that the funding is extremely negative, that you're basically getting paid to long. So,
Yeah, I would not be touching that one right now. Certainly not shorting it at the very least. But like what CJ was talking about, I'd look for that plus a reset of the funding rate back to neutral. That's kind of the sign that the herd has moved on from this coin into something else. And right now the herd is very much gathering around this watering hole. And it's it's really crowded. So it's not going to be easy to, glean any profits from this because it is it is very crowded. And because of that, I think we can see some extreme volatility to the upside, despite the fact that, the market is down. Like days like today are actually best case scenario for Loom because it scares everyone out of their shorts. So they're forced to cover and price goes up. And I think that's a likely scenario as long as the equity market continues to slide.
Appreciate that, Monte. Just want to say to what yo daddy o. Thanks, guys.
Daddy-o.
No problem. Anytime, daddy o. Anytime.
All righty. Well, thank you for watching. We're going to go ahead and get out of here, get back to the battle stations. You can obviously always find us in the Trade the Chain community. 14-day free trial at www.tradethechain.com. And if you do not know, that gets you access to the community as well. So if you want your 14-day free trial, you want to check out what we have going on in the community every single day, that will get you access immediately. So feel free to sign up there, 14 days free. And again, BingX, DideX, centralized exchange, decentralized exchange, take your pick. We have links down in the description that will give you bonuses and discounts on fees for your trading. So please do check those out if you're looking for a new trading venue. We will be, we'll do the show every Monday, Thursday as usual. And please make sure to check out CJ and Monte every morning on the exact same YouTube channel you're watching now at 10 a.m. where they deliver insights on crypto and equities every morning. So good luck. Happy trading. See everybody Monday.